Okay.
But yeah, so I mean, you would think that the market is going to be terribly down with the whole trade war. You would think, okay, the market is going to be scared that, oh, tariff is coming in and everything. People will dump your stocks. That has not really happened in the equity market. Although in the bond market, you can see maybe a little trace of that. We feel like people are dumping US Treasury bonds, because of the whole escalation of trade war. So it's affecting the yield. But in terms of the stock market itself, so there's just a divergence between the stock market, the bond market, and many things are going on. Gold is going up, Bitcoin is going up. So so many things to unpack, to be honest.
Yeah. Although I would like to disagree with the fact that
That's why you are here. Disagree.
the market didn't react the way we think it's going to be. The market would react,
Yeah.
right? Because when Trump entered and when Trump was elected, everybody was kind of happy.
Yes.
Investor settlements was high. Everyone was thinking like you have mentioned, like you were exactly you're at
I was like, let's
yeah, but then he entered and he did what he said he was going to do, and the market reacted appropriately.
Welcome to another episode of Moneyrise The Podcast, where we discuss the global and local economic trends that matter to you. I'm your host, Yemi, and today we are taking stock of the first half of the year, H1 2025, with a focus on the economies of Nigeria and the United States of America. To help us make sense of it all, I'm joined by not one, but two brilliant financial analysts from RISE, Damilare and Timmy. Both of them will be breaking down the key drivers shaping economic activity in both countries, and more importantly, what it all means for businesses, consumers, and investors like you. Hi, Damilare.
Hi, Yemi.
Hi, Timmy.
Hi, Yemi.
Are you guys excited to be here?
Yeah, it's nice being here. This is the first episode, and I hope we're going to have more like this.
Oh, okay.
Yeah, I'm hungry, sharp, but it's just me.
Damilare, what do you mean you're hungry? What? How have you not eating?
Fuck no, I've been in meetings and all, but it's like that. I like talking about things like this anyway, so it's good to be here.
He says it is good to be here, but I've been begging him for 2 weeks.
I mean, time and chance.
Of course, time and chance. That's what we are calling it. So how are we starting today? US or let's start with the US. I'm not giving you guys that choice.
Okay. Let's go then.
Let's start with the for America, it has been an interesting year. Let me tell you, when Donald Trump entered, my portfolio was going up. I was in the moon. Everybody was saying we are going to make it. I thought by now I would have retired. Like
Got to the Tesla or something.
But now I'm in the trenches because it all started with, it's good for investors, it's going to be good for everybody. And we were happy. Stocks was flying, crypto flying, everything but it then started this is tariff. That America is making so much money, others are making money for me. You cannot, this one cannot, that one cannot. And before we knew it, everything tanked. And so it has been a lot to unpack. So let me start with you, Damilare. How can you make sense of H1 for the American economy?
To put it in a single context is going to be difficult because so many things have unfolded in the first half of the
I agree with you.
First half of the year, especially in American economy, and then putting a much broader context, the global economy.
Yep.
Tariff wars from the Liberation Day, Trump's comment on several other things, the big beautiful bill,
Yep.
the Israel-Iran war. I think it. Anyway, so far so good. So I would say I'm surprised because the way you would think the market is going to react to all these things is not how the market has reacted. I mean, by now you probably think probably like maybe minus 50, minus 20%, especially the S&P 500.
Yeah.
Maybe the stock markets. You probably think maybe like down 15 or 20%, but interestingly, we're like 5.5% each one.
For the S&P.
Yeah.
How was guys performed?
I think we've done 11 points. I know you beat the S&P.
We are actively beating the
Yes, we're actually beating something. So
and way higher than the
I'll thanks to these two guys and the rest of the finance team.
I wouldn't take credit for that. I wouldn't take credit for that.
So the finance, we are only. I think we beat S&P.
we beat S&P every year. We beat it significantly last year.
Okay.
But yeah, so I mean, you would think that the market is going to be terribly down with the whole trade war. Trump, it's not like Trump came in and then he just started trade war. He had always announced that when he comes in, he's going to
do this and that.
Yes, first, make America great again. I would put the tariff on China, and then maybe anybody that is reciprocal tariffs. But you would think, okay, the market is going to be scared that tariff is coming in and everything, people will dump your stocks. That has not really happened in the equity market. Although in the bond market, you can see maybe a little trace of that. Yields have gone up actually. I think we're currently at 4.4, 4.5% in terms of yield for the 10-year and 30-year
And what does that mean?
US Treasury. So typically when the yield goes up, so yield and price of a bond, they have inverse relationship. So when the yield goes down, that means the price have gone down. For your price to go down, that means people are selling it. So people are, we can't really say who is dumping it. People have been dumping US Treasury bonds. There are speculations that Japan has dumping it, or maybe some of these Asian companies. And I think Tim is also going to weigh in on that. But we feel like people are dumping US Treasury bonds, because of the whole escalation of trade war. So it's affecting the yield. But in terms of the stock market itself, so there's just a divergence between the stock market, the bond market, and many things are going on. Gold is going up, Bitcoin is going up. So like so many things to unpack, to be honest.
Yeah.
Timmy, what do you think?
Yeah, so I agree with most of what you have said. Although I would like to disagree with the fact that
That's why we are here. Disagree with
the market didn't react the way we think is going to be, the market would react.
Yeah.
Right? Because when Trump entered and when Trump was elected, everybody was kind of happy.
Yes.
Investor sentiments was high. Everyone was thinking
I was
like you
like,
have mentioned,
yes,
like
yes,
you were
yes,
exactly you're at
I was
least,
like, let's,
you know.
let's
Yeah,
have it.
but then he entered and he did what he said he was going to do, and the market reacted appropriately. We saw the S&P
It crashed.
drop, it crashed
12%.
exactly.
In 4
So
days.
from maybe like an all-time high, going down to about 12% within the space of about 2 months.
I remember that.
Yeah.
Period. It was
You
it was
would
not-
remember because yes, you see many reds on your photo.
Yes, it was not.
Yeah,
It was not a
so-
good time for me.
I think the market reacted the way it should, but then you also the market also like reacts to body language of people. So the way Trump has been going about the whole tariff thing, saying today I'm imposing tariff on China,
Tomorrow it's
tomorrow
going
I'm
back.
doing this, and then he takes his word back and say, okay, I'm going to give to July 9,
Yes, then now we
the
are
90 days
August,
break,
and then now
yeah,
August
and now
1st.
August 1st, right? So I think the market have seen that and they've noticed that Trump is not actually really committed to putting tariff,
Exactly.
but then he wants to negotiate new trade deals and he's using tariff as an instrument to do that.
Mm-hmm.
So the market is saying they are gambling on the fact that people are going to respond and there's going to be deals among these countries, and we are seeing those deals happening. We've seen China and US come to an agreement,
Yes.
and other countries are also doing that.
Oh,
Also.
did China and the US they've come to an agreement?
Yeah, there's an
Oh,
agreement.
yeah, I saw that. I
Yes,
saw
that
that.
part,
Yeah, but the tariff is still high though.
No, it's so the average tariff went from about 2.5%
Uh-huh.
to now we have about 20%. That's average tariff overall on all US imports, right?
Yeah.
So it went from 2.5% to about 20%.
Yeah,
if I'm
17.9.
correct. So it has really risen. Even tariff as we speak now. At this point in time,
Mhm.
tariff contributes to about 5% from 2%
Okay.
of government revenue.
Yeah.
Right? So we've seen that tariff is actually working the way Trump said it's going to work. But then I don't think the tariff is the end goal. And we are seeing that. And for the bond market, as Damilare has said, yeah, we can see that the people are really dumping the US bond. And that is evident from the fact that Moody actually downgraded
The
the
US
US rates, which is because of their ballooning debt. We see that debt keeps rising. And again, they recently passed the big beautiful bill. Yeah, so they just passed that, and that is projected to add about 3.4 trillion dollars.
Yeah.
So we still see people continue to beat down the US debts, and yeah, that's
Thank you very much for that, Timmy. So you said something that I find interesting. You said tariff is not the end goal.
Yeah.
What then is the end goal of all of this?
Well, I think we are going to find out together.
I cannot lie. That sounds like a threat.
No.
It sounds like
So we are going to find out together in the sense that for these world leaders, they don't come correct, they don't come
Okay.
straight. So they might be saying one thing, but then the end goal is another thing. For Trump and I think for Trump, the end goal would be a reasonable end for Trump would see manufacturing come back to
to the US.
Exactly.
that would be a very reasonable end. But then does it really make sense? Are we going to see that? I don't think we are going to see that, because for you to build, he's going to spend 4 years there.
Yes.
Probably someone coming in is going to probably just reverse his policies. And when that happens, we are going to see what's the point. The point, everything is dead, right? So I think that's the end goal for Trump.
Okay.
Basically.
The way I see things about the tariff thing is because I mean from their formula again using the import export. What?
You might as well have just gone somewhere and got a big number from somewhere.
Exactly. So
Very silly stuff.
what I'm thinking is Trump is. I mean, I want to see myself in this point of view. He's just trying to do the balance of trade for the US.
Exactly.
Yeah.
That
It's trying
people
to-
have been taking advantage of the US for a minute.
Exactly. So US has negative balance of trade. I think when I checked last, it was I could actually just confirm the balance of trade for the US. It is around balance of trade, negative $71.5 billion.
Okay.
Yeah, in the world. So they kind of import more than they export to the global economy. And that's because people tend to dump their production, dump in quotes, because people, they make their own prices cheaper. The likes of Japan, China, they make their own, they develop their currency.
Yeah.
The way we've done in Nigeria, so it is easier to export than to import. So Trump is just trying to put a balance to that, such that at least their own export is also like at least on par or more than what they are importing. That way your economic activity is going to grow. I mean, in terms of manufacturing,
Yeah.
if it is easier to import something into the country, why will I manufacture it? That's why Apple is not manufacturing in the US currently. So it's easier to manufacture these phones in China, the likes of Japan, Taiwan. So that's why they're not manufacturing in the US. So if in a way there's a way to actually bring manufacturing back to the US, it's going to take it, and that's what it's trying to do currently. Well, I don't see it materializing anyway, because those things don't take 2-3 years to materialize. You don't
Yeah.
build factories, to produce those short amounts of time. So eventually you might not get the results we want to get in short term, but let's see. Fingers crossed, as Timmy said.
We have 4 years or 2-3 more years of finding impacts.
Mhm.
As Timmy said,
Well, I'm hoping that the next president coming in probably follow through, maybe for the best interest of the US, because for the US it would be nice for us to see some manufacturing back.
Yes.
But then it's just gonna
also I don't know if a lot of people are saying a lot of manufacturing, but I feel like this is 2025
Mhm.
and it is no longer the 70s or the 60s that manufacturing is everything. I don't know. It just feels like you don't need a lot of people to actually do a lot of work like we needed in the 60s or the 70s.
Yeah, automation has taken over.
Exactly.
technology.
Automation has taken over. Like before, probably you needed 10 people to build a car. Now you probably need only 2.
Yes.
you just made Trump's point for him. So one of the appeal for manufacturing in China is that the Chinese has a very large population, so labor is cheap, right?
Yeah.
So bringing manufacturing back to the US, where you don't have that luxury, one of the way they want to achieve that is by relying on automation, right? So I'm saying, bringing back manufacturing to the US might be possible using automation, just like you're saying. So
Okay.
it just made Trump points for it.
Yeah, because when he started this entire what's it called, tariff thing, the one thing I did was probably read up more, and I realized that manufacturing, the way Trump and all of them have been talking about it, is not what it is. Like, it is no longer the 70s or the 60s. Like, we've moved past the industrial revolution. This is another revolution entirely.
Yeah.
And you don't need. But thank you for that point on automation and like that's why we are here. Also, when the tariff thing started, one word kept creeping up: recession.
Mhm.
How are we with that? Are we out of the waters? Is there still a recession coming? How do we manage that? And the likes.
You wanna go? So the thing is, at the start of the trade
War.
war, so there was like a 60% of a global recession.
Okay.
Well, now it has dropped to about 40% recession. So that means consumer sentiment is actually changing about what is currently going on. There's still that fear of recession anyway, because eventually this trade war, we will still see some effects in the global economy, in the US economy, because as far as they are making this money on this particular imports, someone has to take that cost.
Okay.
It has to go to the end consumer.
Yes.
Then, it's not like when your income, your expenses is going faster than your income is coming, your purchasing power is reducing. So there's still a 40% chance of recession, but compared to where we started from, maybe 60-70%, I mean, it has reduced. So it's still there, but it's attenuated.
What do you think, Tibu?
Yeah, I actually agree with him. Q1 we saw the US economy, we saw it actually decline.
Yes.
It was a 0.5 decline, which was as a result of reduced consumer spending, reduced federal spending, and an increase in imports. So at that time, there was a lot of projection that we are going to see
Recession.
because what is a recession? A recession is when you have two consecutive decline in GDP quarter by quarter, right? So I think the risk has reduced. We've seen that the US consumers are as relentless as they've ever been.
Yeah, exactly.
People are still buying despite the fact that we are seeing tariffs.
Prices are good. Yeah.
So, and if people still continue to spend the way they do, we don't see a reduction in spending as a result of the high tariff, and imports reduces because during Q1 we see a lot of people importing because of the
anticipation of tariffs coming into play.
The April night, people brought in stuff to counter the cost of tariff.
Yeah.
So before the tariff deadline coming, people are buying more goods. Right? So that actually reduced cost reduction because imports reduces GDP.
Yeah, I have to say thank you guys for coming because I've not done my masters, and the way you guys are breaking down these things, I'm blushing. I'm happy. So recession aside, let's talk about inflation. Like the word is always comes up all the time, and then when this tariff thing started, it is like before you used to buy something for $2 because you send it from the Chinese economy and you send it to the American economy, and now you have to pass the price of that tariff,
of course,
the 100% tariff. So maybe a shirt goes from $2 to $5 or something like that. And a lot of people are now like, inflation. How has that gone? Or how is that going or how did that go for Q1 and 2?
So I think the reason why we've not seen a spike in inflation again or in price of goods and services because first of all the Q1 imports, which most of the manufacturers did, so a lot of them stock up on their inventory to not get the immediate effect of this tariff on their price of goods and services. And I think the second thing is we would likely see this effects in the coming quarters because by that time the effect of this tariff would have come into play. When the final tariff, go into practice, people are now paying tariff on what they're importing from China. They will start seeing that. And I think inflation is also a lagging indicator, so it does not necessarily capture what is occurring now. Oh. So a lagging indicator is something that it is showing you what has happened in the past, not what is currently happening in the. No. So the stock market is a leading indicator. Okay. Stock market tells you what is actually going on, what people think about the economy. I don't want to liken it to Nigeria, but like in Nigeria now, people have faith in Nigeria.
We are still going to Nigeria.
Yeah, exactly.
Don't
let us. Exactly.
Calm down.
So, stock market is leading indicator. Inflation is like a lagging indicator. So, we have not seen the effect of what is currently happening right now in the market. So, we're expecting to see the effect of the tariff on inflation in coming quarters. Say this Q3, Q4.
So, is that why the Fed has not taken any action on inflation yet, where they are still maintaining the current interest rates?
I think anticipation of inflation.
Oh, okay. Yeah, that's why if you look at Powell's press conference, he has been talking about the fact that we are trying to be prudent. We don't want to cut rates now and then we see a spike in inflation. Yeah. So it's better for you to be careful than for you to start something you don't want to see the end, right? So they've been very careful and maybe hopefully if we don't see any spike in inflation and it goes closer to the target being 2%.
What are we right now?
We are about, is it
2.4?
Yeah. Okay.
Well, Timmy, do you think you can go to 2.4? Like 2% from 2.4?
It's going to be hard because look at Trump. Look at what Trump is doing. The tariff and everything. It's going to be very hard for us to meet that target, right? But then I don't think it's impossible.
So the way I'm seeing it, I don't think that 2% is achievable. For the 2% to be achievable, you have to shrink the money supply more. And then, shrinking money supply means you're cutting. The market is already on tight ropes. Interest rates is like people are comparing interest rates is like for it to take it down, you have to probably increase interest rate again
Again,
to reduce money supply, and that is essentially going to, it's like a rickety vehicle that's waiting to break down. Everything is just going to break down.
nobody wants to see the Fed increase interest
Exactly,
rates.
exactly. So I don't know. I don't see that happening. But anyway, inflation has been sticky. We've been on 2 point something for like how many months now? Almost a year now. We're 2.5, 2.6, 2.8, comes back at 2.4. But as it stands, we're at 2.4%. I think it went up from 2.3 it was 2.3 in April. In May it was 2.4.
Yeah,
So it went up again by 0.1% month on month. So it has become sticky. It's not looking like something that is going to go to the actual 2% that Fed wants it to go to. So fingers crossed on inflation, but I mean, I'll be realistic with you. I don't say that inflation will go into 2%. And in fact, in the coming months, I see it's going back up based on recent happenings.
So there is then an issue. The issue is that Trump has been saying reduce this thing.
Exactly.
Powell has been saying no, let's maintain it the way it is. What is going on and why is when interest rate is high, the cost of borrowing is very high. People can no longer do businesses. So there's that dichotomy.
Yes.
So what do you guys think about that?
So I think it's just a mismatch. Sorry, Tim, you agree. I think it's a mismatch between the fiscal and then the monetary policy. Like, the fiscal is done by the government, the monetary is done by the Fed. And the lack of alignment between them is what we are currently seeing in public space. Because
it is always like the other day, I think Twitter trended and Powell is going to resign.
Yeah.
And the way Bitcoin and everything went up.
Yeah. So
is he resigning?
I mean, allegedly, I saw a publication, allegedly for the sake of
I looked at my portfolio and I'm like, what's going on? So I went on Twitter and I see Powell is resigning.
So there was a publication from the president of the president that oversees the real estate market in the US. That is the Fannie Mae and so there was like a caveat in the publication that he thinks the Fed of the chair of the Fed is going to resign. So that was just a rumor that was flying around. Not like he's going to resign. But anyway, in terms of the lack of alignment, realistically, I mean, everything's at all-time high. The stock market is at all-time high. Yield at all-time high. That's the divergence, first of all. So there are so many things to look out for. You can't just say because president has said let's cut interest rates, we'll also cut interest rates. It's like automatically inflation will go back up. Like that's just one short thing.
Yeah, so the Fed is supposed to be independent of the president.
Exactly.
Yeah. And the thing with Trump, because I over the years I've listened to Trump speak. Trump is always optimistic. No, would I say optimistic? He likes to go big. So it's someone that wants to go big every time.
Let everybody spend money. Let us pump the
let's
oil, do this one.
Let's push, right? And to a trained eyes, going big is not what the US is supposed to do right now. They don't want to go big.
Yeah.
Because if they go big, they'll go home. And
to be honest, they will go home.
So I think it's wise for Paul to be very cautious as he has been doing. I wouldn't want to see him resign before the end of his term, because that would be setting a bad precedent. The president can easily pressure the Fed chairman into resigning if he doesn't do what he doesn't want him to do.
So we are going to big beautiful bill, but before then, let's just talk about the Iran-Israel war. Nothing happened at the end of the day. It is just for 12 days. The 12-day war.
Something happened though.
Okay.
It's not a nice view seeing those missiles flying around, man.
I think at some point I was on Twitter and people were all affirming missile dropping on each other's head, and they're like, "This is what is coming.
This is not a laughing matter.
This is what is coming for you tomorrow." And I'm like,
"It's not supposed to be."
What do you mean? This is what is coming?
I think they're just both leaking their lessons, or they're picking the pieces together. But I mean, things actually happen. We are saying things happen because we didn't really feel it in the global economy because the price. So the thing is, people saw Israel attacking the first day. I think the price of oil went up, and then people saw the body language. It doesn't look like that was going to escalate like that. The way Israel was responding, if it was going to escalate, Israel would have probably maybe made it more the fatality or the kind of damage that was happening. So people are like, this is not going to go beyond a particular number of days, and intervention of the US. People just need there were speculations that Trump actually made a deal with the president of Iran. Yeah. So that's why they were able to just bomb the whole thing. So market has priced. It's like even like someone like me, I already expect that the Elijah everything is just in the next 3 weeks, everything will die down. So people didn't really buy into the oil futures. As I said, at the beginning, people bought into the futures because they thought it was going to be like a serious war. But when they saw the body language of each party, they're like, no,
Nothing's going to happen.
Nothing's going
Yes,
to happen.
that makes
So then
sense.
you track back to like $67 from 19.
Okay, what do you think?
I agree with him. Like, we thought it was going to be something serious, and if you know where Iran sitting, they sit on a route
Yeah,
that controls about 60%
they
of
stay
the world oil.
almost or something like
The
that.
Strait of Hormuz, yeah. And them taking control and closing that up would have been a catastrophe. That's
Exactly.
what everybody was. In fact,
Expecting.
I actually bought Aradel stock, hoping that was going to happen. So sorry, I'm not profiting from war.
Position.
But we didn't see that happen, and overall, it's a very good thing for the world, because if that happened,
Yeah,
I think the stock market would have dropped very, very hard, because power cost is going to be going up, crude oil would balloon, but that didn't happen, and at the end of everything, I can say it's ended very, very, it's like one of, close to the best case scenario, the ending.
I think at the end of the day,
At the
everybody
end of the
came
day,
out
it was-
victorious.
yeah.
Israel can lay claim to the fact that okay, they are no longer building the nuclear weapon. Iran can say we shut down. Exactly. And US can say I'm the one that stepped in.
Exactly. So everybody,
Like it's a
went-
win-win for everybody.
everybody
The stock
went
market is happy. I'm happy. You're happy.
Yes.
Everybody can go investing.
Yeah.
Okay. So now let's talk about Trump's big win, which is the one
Big, beautiful bill.
bill.
Abi.
Tini, you are an expert at this because you wrote an article. you wrote a very nice article on it. And what do you think? Let's start from there.
So
What is the big beautiful bill?
so the bill.
Explain it to us.
So the bill is supposed to, what the bill did was to extend the tax cuts that Trump implemented
yeah.
in 2016 when he came in. So there was a legislation then cutting tax for so many people. There's like a lot of group,
Yeah.
and then it cut crack. But the beneficiary then were the richest of the richest, right? So he extended the deadline for that tax cuts, and then added some other provisions to the bill. No tax on tips, so many other like that. No tax on tips. Also removing EVs, removing
Yeah.
subsidies on EVs.
That's the one that
so
made Elon Musk annoyed.
yeah, exactly. Yeah. So so the aim of everything, right, was supposed to reduce the deficits, right? But then we see that, okay, yeah, before I go forward, they also removed spending on Medicaid. Medicaid is their insurance.
Yeah.
So trying to cut costs, right? So you're cutting costs, and then at the end of everything,
You're
we
spending
see
more.
that the deficit is still rising, despite you removing some important spending, some social security spending that US normally do.
Does
Yeah. But then you're removing all these things, and then the cost, why is the cost going up? Because you're giving some more tax cuts to the rich people. And at the end of the day, this is why investors actually love Trump, the rich investors, because Big Daddy
He cares
is
for
going
them.
to he cares
Yeah.
for them a lot. So he's going to cut tax, he's going to, and then at the end of the day, they're going to benefit from it, even though the tariff has caused have caused some disruption in the market. Yeah, regardless.
So I think the way I was seeing things in China was, it's a government's bill. So governments typically make revenue from taxes, and I think it's primarily taxes. Yeah,
Yeah, primarily taxes.
primarily taxes. So I mean, if you're cutting from your source of revenue, he's trying to balance. He was trying to balance this from one point of view. Okay, I will impose tariff. It's going to increase the price of goods and services, but I'll cut your tax. So that way, you're paying more tariff on goods and services, but you're paying less tax on your income. So you have more disposable income to balance of the increasing. So that should have been the balance, but in reality, it is not. It's not perfect.
Finance is really interesting.
They-
Go
they-
on, continue.
There's no way you can impose tariff to the extent that it replaces the gap
Yes.
that the tax cut
Exactly.
is going to, because tax is like the government's bread and butter.
Exactly.
Tariff I think in the past, the US has tried using tariff in that way. It didn't work.
Yeah.
So we are running a field experiment here.
Exactly.
Like,
exactly.
we are running a field
I think they've tried this thing before.
Yeah.
The US has tried this thing before, and then
It
didn't come out well. So it's just that the big beautiful bill is not. I don't see it as something the US at this point in time, because you already have a huge deficit. Now you're trying to. With this particular bill, it's going to increase their deficit.
Yeah.
Increasing deficit means the government is going to have to borrow more to finance their expenditure. You're borrowing more at high interest rates. So like it's like a spiral of doom. The way I'm looking at it, it's like you borrow more to finance your expenditure. You're borrowing at higher interest rates, and then you're not making enough to even cover.
So what does this entire thing? What does it mean?
You want to go?
So at the end of it all, we are going to see people benefit. There are going to be winners. There are going to be losers.
Of course.
There are going to be sectors that you want to enter, you want to invest in because of the big beautiful bill.
Exactly.
One of those sectors will be the manufacturing sectors, because there was a provision in the bill that allows you. So you don't pay tax on investments, like when you're doing capital investment. So that's to allow companies
incentivize. Yes.
Ramp up manufacturing capacity, right? Yeah. So they remove tax on, say, when you want to increase your manufacturing capacity, there's no tax on that. So you want to go into like some industrial, you want to go into defense too, because the bill increased defense spending. Yeah. So you can look at defense companies on the stock market. Investments you don't want to make at this point are companies that depend on Medicaid money for their revenue, like some healthcare companies. Real estate companies that actually invest in portfolios that have Medicaid earnings. So you don't want to go invest in those kind of companies. At the end of the day, the people that I see that is winning here are the rich people of America.
Because the business owners,
exactly,
just controlling
it's even reducing the inheritance tax. Like when you're
pass over something,
you're not going to be paying as much tax as you. So it's the winners. The winners are the rich people.
Wow. The rich people always win. Capitalism. That's what we call it. Okay. So we've talked a lot about the economy. We've touched, and Daniel is looking at me and he's like, "Look at my time, guy. Look at my time."
Wow, 352.
Damn liars not eating, but team is on fire. So, I know you don't have any choice. I own you until we are done. So, we've talked about the economy generally. So now let's talk about the stock market, and then the real estate, and then the fixed income. Obviously, because those are what concerns the average risers are. Do you get? So the stock market generally, it has been a roller coaster. Finance we like the word roller coaster.
Accurately.
That's not straight in finance.
To be honest.
When you look at the charts, it's actually a roller coaster.
Roller coaster. So it has been starts with we are going to the moon. Then we are
maybe not. Maybe
let's do you get? Real estate has been steady. Also, I think what are the factors impacting the real estate, and then fixed income?
Is it rice related or the US real estate market you're referring to?
Let's do the general, then let's talk about the rice portfolio.
So the real estate, I think it has just been kind of resilient, because the mortgage rate is like what influences.
That's another word they like, resilient.
Because I mean, if you look at the rates, it's not like the rates have really come down. Mortgage rate is like maybe 6.7, 6. So it's not like, although from the historical highs was as high as 7.2 at some point when interest rate was high. So but it's still around at 6.7. Mortgage rate is what influences people if they want to buy a house or not, because that's what you probably pay for the next 30 years or something if you fix it. So in terms of buying houses, this is not the perfect time for house buyers, for like new time house buyers. But in terms of rent, people are able to.
This is the time
exactly for Airbnb, for rent house. So that way for the residential and commercial estate market in the US, things have just been kind of resilient. Like, okay, no matter what is going to happen, people are still putting money into the market. But there are speculations that the way things are going in the US, the way there might be a crash coming soon, but I don't see that happening.
Well, I think in some markets we've seen like price of property go down. I was going through a report in in our next state in Florida,
Yes.
there's a lot of listings. People are not buying.
People are not buying, exactly.
Yeah, because I think it's a thing of the locations of those houses, like they are vacation homes. So nobody's going to go for a discretionary spending that you can avoid.
Yeah.
Like, because people are just going to go for something you want to buy and want to live in, right? So I think people are they are being very prudent. We are not in a point in the economy where you're just buying houses
buy
because you have to think about it before you put your money, because the rates are still kind of high. Maybe when we see a reduction in the rates,
Exactly.
and when it goes into the mortgage rates, we are going to see more.
And so another thing is there has been reduction in the number of housing starts. So new houses that are being built in the US, it's I think it dropped. I can't remember the exact number, but like when I read the last report I read about US housing starts, so it dropped. So that is people that are willing to actually like invest and build new houses for like new couples, 3 beds, 2 beds. That has dropped, and I mean it's an indication that demand is waning for new houses, as Timmy has said. So even with no demand, so people are building less houses, people are buying less houses. I think there was also a point in Washington when the price of houses like really reduced a lot. I think that was also a point when, was it Trump? I think that was when Elon Musk was there, and then it was like he's going to lay off a lot of people, and then people were like putting up their home for sale because they may likely lose their job and stuff like that. And then so that has been a trend. The signs we are seeing is that it's weak, but we've still not seen that in terms of actual crashing.
So that's why we use the word
resilient. Exactly.
Okay, fair enough. So how was the rise real estate, the rise in stock portfolio, and the rise fixed income? How have we performed, or how do we perform in each one?
I think we did 7 point what?
I don't have the number.
Okay, no, I know we did 7.25 or something. I know we've done.
I can help you guys. I don't work in finance. But guess who has the number?
So the thing is, well, I don't want to say unfortunately, but fortunately and unfortunately, we benefit from whatever is happening in the market, because we have all of our properties are like rental properties. We either do them Airbnb or we do like long-term rental properties. So with the rents going up, because we typically like increase rents depending on the interest rate of the mortgage. So the rent has gone up for us, and then that means more income for us. So that's why we've been able to deliver these returns in the past few weeks. And also the other aspect we invest in, which are the rates. The rates have been giving us good. So it's like we're investing in the actual properties, and also investing in the funds that are working on other properties. So we are getting good returns for our investments, capital and stock investments.
The good thing in all of this is that if you're a user, especially a guys user, you're getting returns. This year, they don't have the numbers. I have the number.
Maybe too many numbers in my head.
Rice stock portfolio has done 11.35%.
Yeah.
And I'm seeing that we've beaten the S&P by about 5.8 something percent, because S&P has only done 5.50%.
Yeah.
That means if we've invested $1,000 on rice in January, by now you're up $110.
Yes.
Wow.
The salesman has started again.
What do you say? The real estate returns has returned to 7.12%.
Exactly. I know it was Naira.
You don't have the number. Which one is it? and the fixed income has returned 4.98%.
Yes.
So what it means is that rice users, they are benefiting. And I don't know what is stopping you from downloading the Rise app. And the best part of this thing is these are returns that you don't have to sleep and wake up and start thinking about. You don't have to be like me, I'm thinking, what happens to my portfolio? The sleep. You can sleep well. Let Damilari and Timmy and the rest of the finance team lose sleep for you. That is literally why they are here. That is why you are paying them. That is why they are here. So go to your App Store or your Google Play Store if you don't have the app. Download the Rise, do your verification, and just start investing in the Rise portfolio. It is very stress-free. You don't have to do anything. You can go be the best at what you do. You can be the best doctor, the best lawyer. Do your work. Let us handle that financial aspect for you. Look at them. They don't have any other work apart from making sure that that we return.
Exactly.
What did you say?
Exactly.
Yes, that's a job.
Of course.
That's why it's always thing. That's why it is hard for even me pulling them to come and discuss this thing. They told me no, we are working. We have work to do.
I mean, you can see our laptops in our front.
So now let's talk about the Nigerian economy.
Okay.
That one is quite interesting because when the former president was leaving, it was like
So which one president?
Muhammad Buhari, the
late
Buhari.
president.
Yeah, the late president was leaving. It's so rest in peace. When he was leaving, what's it called? It was like a break or map point for Nigeria then, because before then we had this arbitrage where dollar was trading at 1.2 at some point, and then at the black market it is trading at 1.8 or 1.9, 1.5. It was not stable. You get for what's it called? Subsidy was eating deep into our economy.
Yes.
Then we were probably, for every 1 naira that we were earning, we were paying 80 or 90 kobo.
Yeah.
Inflation was running amok. You couldn't even handle inflation. And so the new president came in, that's President Tinubu, and the first thing he did was to say subsidy is gone, and then he started a lot of reforms, which is like, you know what, this is new business. You get from there, dollar went to 1.9, it went to 1.8, it went all over the place. For subsidy, petrol went from 500 and something to about 1,000 or so.
1,001.
It went high. The economy has been going back and forth, but nowadays, in H1 of 2025, it is now the reforms are working. That's what a lot of finance people are saying. I don't know if the reforms are working for my pocket, but everybody is saying the reforms are working. The stock market is at an all-time high. Life is good for the finance boss. Adam Lai has probably made life is good for the finance boss. So let's talk about the Nigerian economy generally. Who wants to go first? This one people are looking at each other.
Timmy, you can go first. So what has H1 been like for us in Nigeria?
For us,
So the Nigerian economy, one thing I don't like about Nigeria is the slow data. We don't receive data in real time here. We are yet to receive H1 data, but estimate says we are growing by 3.4%.
Yeah.
This is really nice, faster growth than we experienced last year. I also agree with you. I think the reforms are working.
That's what everybody's saying.
Yeah,
reforms are working.
We've seen the way the international market is reacting to Nigeria. We've gotten a couple of upgrades. When US is getting a downgrade,
Yeah, we got
upgraded from Moody upgraded us, which is a very nice thing to see. We see investors invest in our bond, our euro bond very strongly. It was oversubscribed, saying that people actually trust what the president is doing, the work the president is doing. I know some people they're going to come for me saying but let's leave politics and let's face finance. Let's face finance. We've seen our currency go from a different rate in the black market and in the official market.
I think it has stabilized to like 1.5 or so.
Almost coming together at par, which is what you want in a sensible economy. So all these things has been working well, despite the fact that we have a little bit high exchange rate. It has trended downwards since January. We've seen a reduction in our exchange rates, meaning the naira is also gaining strength, right? So when it comes to inflation, I don't know if I should be talking about inflation right now.
Let's finish this the general overview then.
The general overview. Yes. Generally, as I've said, I think Damlari wants to add to Nigeria is doing
every finance bull says the what's it called? The reforms are working, economy is good.
So I don't want to base it basically just on the stock markets, but I think in terms of comparing what prices were like, I mean, I remember like late last year, you want to go out to go and buy a crate of egg. I bought it last week 4,000. I'm going out this today. I'm buying it 5,500. I'm buying 6,000. I mean, the increments in prices were crazy compared to how prices have stabilized now. So I would also want to push the narrative that things are much more better than where we were late last year. So I think the number of reforms that has bring this into play. First of all, is the NAFEM platform, which CBN introduced to reduce the spread between the black market rate and then the official rate. Tinubu said subsidy, which he removed subsidy. Trying to remember this other thing. They also
Dangote refinery.
Exactly, the Dangote refinery was there. The electricity subsidy was there. So a lot of things that the government would typically incur expenses, it has been reducing, and I think that is having a little bit of confidence. Is instilling confidence in a foreign market. Like, okay, this government is doing what they're supposed to be doing, right? I mean, in terms of all of these things, it's showing that the government knows what they're doing. So that is why, in fact, the likes of the IMF and then international community can say, Tinubu knows what he's doing because he's moving in the right direction according to what you think a normal president should do. And that, in a way, has boosted confidence. We saw like over $5 billion FDI into the country in the last 5 months. So overall, I mean, if external people are thinking it is good, we may not see it immediately, but you would not argue that prices have stabilized.
So it's easy for people taking like a bird's eye view to see that the economy is doing good. But when you're in it, it's very hard for you to see the optimistic parts because yes, we are buying things more expensively. And
I think the reason why people are saying things that bad is because we are not where we used to be. Like maybe 1-2 years ago when Buhari was still there as a trigger daddy. I mean, when they were printing something trillion, when they printed something trillion naira. So, but Tinubu has just put a hold on a lot of things, which, the way the money was flowing in the economy has reduced. So, of course, if there's reduction in money supply, it's going to affect. We still have inflation. I mean, inflation we've rebased inflation, but in terms of actual month-on-month inflation went down from 2.34 to 2.2, 22.9. Sorry, I said 2 points. 23.34 to 22.97%. So actual month-on-month inflation has gone down because there's been a form of stability in a lot of things. Price of petrol is not as fluctuating as it used to be. The price of electricity has been stabilized. The foreign exchange as well has also stabilized. So it's not moving as by 100 naira, by 200 naira that it was moving before. So people are able to make plans and then make projections that based on this stable rates, this is what it should be. So it has given a form of stability.
Oh, that is quite illuminating. And if you are surprised, Larry knows the price of egg, it is because it's a Jimbo. Nothing annoys a Jimbo like
to be eggs. There's protein like.
So inflation, I have written so much about inflation, and inflation is one of those things that it went from 34% to down 22%, and that's because of the rebasing.
Effect, yes.
And rebasing simply means that before the major bulk of food inflation used to be of Nigeria's inflation used to be food.
Yes.
And 60%, Nigeria spends 60% of their income on food.
Yeah.
The average Nigerian person. So does that mean like inflation has really gone down that way, or is it because of the rebasing?
So I think it's just the rebasing thing. I don't want to say inflation has not gone down. I mean, our real inflation was probably higher than that, but I think it was just the rebasing and the formula effect. What they basically did, they shifted the percentage of what used to be for food and energy prices to a number of other price items in the baskets for inflation. So that was what affected the price of inflation affected inflation rate itself from the 34 point something. So there's less weight on food and energy prices, and then so they shifted it to things that have less volatility in terms of their prices. So that's how I win now. But in terms of actual inflation we're feeling in the economy, it is definitely higher than that, but it is not as volatile as it used to be. I mean, prices are not spiking as they used to be anymore.
Yeah, that's true, because like before you could go and you say, chicken is now 6,000.
You're like, wow.
And then you go again and they say, it's now 7,000.
At least chicken has been 5,000 for a while now. A kilo has been 5,000.
Is that how much they sell it?
Yeah, it's 5,000. Yeah, I used to cook.
You don't but you know the price of egg, but you know the price of chicken. To be fair, egg is chicken.
Yes.
So there is also a dichotomy, especially in the Nigerian economy.
Mm-hmm.
The dichotomy is simply in the fact that a lot of Nigerians are complaining.
Yeah.
But the stock market is doing very well. So you mentioned something, I had not my master's. So you said the stock market is the leading indicator of the economy. What does that entire thing, like why does Nigeria feel somehow for Nigerians?
So it's not just Nigerians, even the international, the foreign community.
Yeah.
They see like, okay, Nigeria, this market is looking, I mean, in terms of valuation, the Nigerian stock market is highly undervalued, and people are starting to recognize that. It's not like they didn't know this thing from the start. It was just the risk involved in investing in Nigeria. The government policies have been how just unpredictable. You could not predict what the government will do, but now it's looking like okay, Tinubu knows what he's doing. He won't just wake up one day and implement a policy that will affect the foreign community negatively. So there's that. Okay, there's a bit of stability in Nigeria now. The market is truly undervalued. Let's go in there. So people are saying that it's like you're having faith in something that is not having faith in itself yet. So people are having that faith in us that okay, Nigeria's economy is better and is going to do better. That's why you can see the likes of IMF and JP Morgan
saying
they're doing better. So that is why we say it's a leading indicator. It is showing what people perceive of the Nigerian economy as of today. People are saying that okay, it is better, although it's like a top-down effect. At the top, people are saying like things are better, but bottom here, we are not feeling it. So it's like a top.
It's going to take a time. It's going to take time for it to trickle down.
For it to trickle down to us.
I don't know.
trickle down.
Yeah. No, it's not that kind of. It's not that kind of one. The one that Trump speech about snow.
Okay.
Which is about
so there's also the Dangote refinery that you mentioned that has been a game changer. How has that been a game changer?
So Dangote refinery. Timmy, do you want to go? Because I'm not talking.
I don't think it likes Nigerian economy. If it is American now, his bone is only.
No, it's not like that. So the Dangote refinery has really helped the Nigerian economy, saying it's doing the job that our national refinery is supposed to be doing. That is refining crude products here in Nigeria and reducing the import pressure that we always feel when we import petroleum
into Nigeria.
Yeah, into Nigeria. So that has really helped. So some would say it has really helped. It has really contributed to the stabilization of our exchange rates because we don't need to now start
looking for
dollar to buy for, and seeing what it's doing, trying to expand this downstream capacity, buy more trucks and to deliver to the last mile. We think this is also going to help even, number one, balance the price across different regions and also stabilize petroleum prices in Nigeria. So overall, it's a plus to Nigeria. It's another thing to talk about how is becoming a monopoly in the oil market, in the oil and gas industry. That's another thing. But I would like to think it's a net benefit to Nigeria, to the economy. Yeah.
Okay, that makes sense. So let's talk about the bright spots. You get like sectors, the oil sector, the GDP, and all those things. How has obviously we talked about Dangote and the oil industry. How have the other sectors, how are they performed?
Sorry, I think I have something I could want to key in about the stock market earlier. So another thing that also happened in the Nigerian market has been the retail participation. You've seen increase.
Everyday people are.
Yeah, so like people are now getting more information. I think information is getting out there more that okay. I mean, Better Glass has done over 400%. Yeah, to date.
For 414%.
And I know Honeywell has also Honeywell mills have done about 270%. People are getting to see like, okay, I could actually like make some kind of money, generate wealth from this particular market. So young people like me and you are starting to see the light. Okay, we could actually also invest in the Nigerian market, and then so that retail participation is. And then if you look at our economy, so most of us were young, so our disposable income is higher compared to like maybe like 5-10 years ago. Our parents, what they were earning, so increase in disposable income, and then that money being able to go into the stock market, go into the economy is also one of the things that was spurring the Nigerian stock market. So now, in terms of what you're asking, the sector that has performed in Nigeria.
Yeah, for instance, the oil, what's it called? The oil output is not getting. There was a time it was like 1 million and so on.
Yeah, it was between 1.2, 1.3 million pounds.
So how was
that was also one of the things that I also like feel to capture earlier. It was one of the things that also spurred investor confidence because oil production is increasing. If your oil production is increasing, your revenue is going to increase. Although we use that future inheritance to borrow money, but it's actually increasing. So increasing production capacity. I think we peaked at 1.74 million barrels per day in January, February.
Yeah.
Currently, I think we're about 1.47 million barrels per day. So I think it's 1.4 something. I'm not sure it's 1.4.
Still below the target though.
It's still below at 2.1 million barrels per barrel target, at least compared to where we're coming from. It is much more better. So, in terms of the actual performing sectors in Nigeria, it is obviously the manufacturing sector in Nigeria, services and manufacturing sector in Nigeria. So I think our financial sector has also performed. That is why you can now see most of these other companies pop up. Like Better Glass is a what does Better Glass do again? I think
Well, they manufacture bottles for
exactly.
Coca-Cola.
So if you look at the top popping companies in Nigerian stock markets, a good number of them
They
are
are manufacturing,
manufacturing.
and that's actually a very
So manufacturing, consumer goods,
exactly.
you have the likes of Honeywell that he has mentioned.
and that's LD.
Agriculture,
Agriculture, so
the Okumos of
Okumo
this
and
world, Prescos of this world are also making a killing.
So everybody's eating one. And then our GDP, not necessarily, but GDP contribution to, maybe oil and non-oil.
Yeah.
Non-oil has contributed more. In fact, oil has declined in terms of contribution.
That's actually LD.
So that means our non-oil sectors are actually like performing better now. The manufacturing, the services, the healthcare, hospitality. So they're doing much more better. But at the top of all of them is manufacturing.
So generally, what is the outlook for the Nigerian economy?
Outlook. I'll allow Tim to go on that.
Why? So why? So for the outlook, I would say, yeah, it's still early days. Something that's been destroyed for this long. We don't expect it to be rebuilt in 1 or 2, 3 years. Yeah. So I think we still have a long way to go. We still have to deepen the markets. For the stock markets, I would like to see that now that the stock market is performing the way it is, we'll see more companies listed on the stock market. And I would like to think, looking at the US economy, the fastest way you can create wealth is through the stock market.
Mm-hmm.
People investing and actually like generating returns from your economy doing good. That's the company in the economy doing good. So I would like to see more companies being listed in the stock exchange, seeing that the market is doing very well. I think that is going to entice market companies into listing. So we would like to see, obviously the government is spending more. We are seeing more infrastructure programs being developed. So that is going to also trickle down, and everybody's going to benefit if everything goes well, right? So for me, I am kind of optimistic. I think I'm the most optimistic I've been about the Nigerian economy in like last 5 years. Because things are looking.
We are up.
Things are looking up.
Eh?
We are not up yet. Things are looking up. So yeah. So going forward, for me, I don't think the economy is going as fast as it should. We want to see more growth. I want to see the economy growing 7 to 8% annually. Given that we have this kind of population growth, we should be growing faster than even China is growing. China is currently doing 4.6%. Like they are projected to do 4.6%. We should be growing. Yeah, we should be going faster than China.
Yes.
Yeah.
I agree.
So until we reach that place, I wouldn't say we have arrived.
Okay,
So,
but we are getting there. Slow and steady.
slow and steady. Yeah.
Okay, that's fair. Damla, what about you? You agree with him?
So yeah, I agree with a lot of things he had said. I think our economy, according to estimates, no official data has been published yet, but according to we grew by 3.4% in H1 GDP. Nigerian economic summit growth, the projected 5.5% for full year GDP growth, but I don't see that happening eventually. But I know like decent numbers that I'm seeing maybe 3 points at the end of everything. At the end of the day, we just say like 3.7, 3.8% increment in GDP. But I mean that's small compared to if the US can do. The US is also projected to do 1.5%, down from maybe 2%. If the US is $29 trillion economy is doing at least 1 or 2%, and we're doing 3.8 for a $186 billion economy, I feel like we are underutilizing our capacity. We're not achieving that potential we should achieve yet. And the things I'm looking forward to, in this particular H2, I'm looking forward to, as I said, more companies listed on the Nigerian Stock Exchange. I'm also looking at more capital market reforms that allows more flexibility to also come in and play in Nigeria's capital market, because there are still so many red tapes and bureaucracies that are hindering foreign capital investment into the country. So I'm hoping more policies are going to be implemented that is going to reduce that bureaucracy and red tape. I'm also looking at increments in our oil production, because it is very, very crucial for the economy. So it's like a egg and chicken thing. The more oil we're able to produce, the more dollar we're able to generate.
Philosophy. Like
the more dollar we're also able to foreign exchange earnings. Our foreign exchange earnings is what we use to defend our currency. Our currency ties with everything in the country. If the Naira crashes today, everything will become expensive. So if we are able to at least defend the Nigerian naira, stabilize it in a way, the price of goods and services is not going to be as volatile as it was maybe late last year. So that's in check. And then also oil and gas, crude petrol itself. I see Dangote refinery doing a lot. I mean, it's starting to pick up pace now. This new 4,020. I can't remember the exact number. I'm not very good in numbers. But I know the over 4,000 CNG trucks are imported into the country.
Yeah, I know.
So that should also boost supply in the markets.
Yeah,
If
so-
the supply price, is economics, is finance, supply and demand. If there's more supply and the supply is meeting demand, prices are going to come down. Though we are still dependent on the global crude oil, but it's not that expensive. So I feel like the price of petrol should come down. Naira stabilizing is looking good, to be honest. Just the two key things that affect the layman like us.
The good thing is, if you are listening to this and you've heard them say Better Glass did 400%.
No.
You've heard them say
do your analysis.
You've heard them say Better Glass did 400%, and a lot of people are investing in the Nigerian stock market. If you are looking at investing in it, we have a sister product called Chaka.
Yeah.
Please download the Chaka app and start investing. But please, unlike Rise, you have to do your own research. Don't say because Damilare said Better Glass did 100%, I should buy Better Glass.
Better Glass has moved though.
So please do your research, and this is not financial advice on what you should buy.
Yeah.
Okay. So
Did you see the news on this Dangote, not Dangote refineries, or the NNPC refineries that are not now working and
the best time to sell those refineries was probably
20 years
ago. Exactly.
I mean, it's sad, but I think those are like one of the few bad things that I think I've seen in the past. The crude for dollar affects him. The money was supposed to use to revamp those refineries, and now the money is gone. The refinery is not working, so it's like we've used our future production to pay or something like that. I mean, what
The money they've spent on those refineries, we could have used it to achieve.
that would probably spent almost the same thing building his refinery.
He said he spent $18 billion.
$18 billion,
Dangote, I think he spent $20 billion.
And Dangote wasn't that expensive because of there are several factors. The delay in his actual
Exactly, and what he wanted to build before.
He had to pay for land or something like that. That was why he spent more than that. So, I mean, we could have built a new refinery with that money, but it's Nigeria. People have gotten richer.
So thank you guys very much for coming. We are coming to the end of this, but I just remembered and realized that we talked a lot about H1 in America, and we didn't mention AI.
Yeah.
Like,
So I think, of course, as you had said, we can't really touch on everything. But yeah, I think it's a core and vital thing we don't really get to talk about. So in the stock market, what really drove the stock market was the AI and communications sector, communications industry, ICT.
exactly.
So the likes of Nvidia has done 22.91% year to date.
Yeah.
Meta has done 22 point something year to date. So we also have the banking sector, actually, the likes of JP Morgan. JP Morgan has done 19 points, maybe 7. I know it's 19 point something.
He knows because he have them in his portfolio.
Yes,
We also have them in our portfolio too. So we have
So,
three.
I mean, he concentrated towards the AI and then ICT sector, but we see as the likes of the industrials also coming in. IMS and us has also done now. It has done something significant. Yet it may have dropped because of the this thing. But I know like those stocks. And then if you compare those returns to the S&P 500, these guys have done 20 something compared to S&P. So they've been the one carrying the S&P. So of course AI is it. The AI is here to stay. Yeah, I don't think we have any choice on that. Microsoft has also done something around 19 point something percent here today. So
Okay, so we are rounding up. As I said, what should they be looking at for both the Nigerian and one answer each, different answer. Don't say I agree with you. Don't say you agree with me. Just
well, that's agree with each
if I
other.
hear the word I agree with you one more time. So just tell me, what is one signal that people should be looking out for in Nigerian economy, the US economy? Timmy.
Let him go first. So I can agree with him.
So one thing we should look out for in the Nigerian economy, we just want one thing.
Yes.
Sorry, I need to get context. It's like the stock market or the general economy.
General economy.
General
Probably anything you like.
So for the general economy, I mean, let us look out for the oil and gas production. And the second thing I want us to look out for is the I think it should be a foreign. No, let me say naira. Naira, actually. Naira.
Okay. Is it naira stabilizing
Yeah, it's naira stabilizing. So
to more than 1.5, less than 1.5?
yeah, it's naira gaining more and gaining more. The dollar is going to
Wow.
things.
Wow. Okay. What about you, Timmy? Don't agree.
I agree with him. I think the naira stabilizing and even dropping more than it currently is now would be a nice sign. Nice sign for you to invest in naira
Exactly.
instead of dollar,
So that's in naira.
because our Nigerian companies are reporting great earnings, which is translating into increased share price and everything, and then we are not losing value as a result of dollar appreciation. So I think the dollar depreciation thing is dollar stabilization thing, naira stabilization is nice. So for the thing I'm actually looking forward to, I think I'm looking forward to seeing more companies listed on the stock exchange.
Okay. That's
A couple of them have listed, and we have seen the way they've moved. I would also love people to also look out for those companies. There are companies that probably they are trying to raise more money and also being listed. So yeah, I'm looking forward to that.
all right. Thank you very much, guys, for coming. And I hope when I invite you in 2 weeks' time, you won't say you are too busy.
If you didn't give me water, I'm not going to come in.
I'll do better with the water situation. Timmy, I hope you enjoyed yourself.
Yeah,
When I invite you next week, are you coming in 2 weeks' time?
I'll check my schedule.
Thank you.
Thank you for tuning in to today's episode. We hope you gained valuable insights into the economic performance of Nigeria and the USA, as well as the performance of our RiseVest portfolio. We are doing well. Stock market 11.35%, real estate 7.12. Let me tell you, I'm looking at these numbers. I'm saying this number off the top of my head. Even that lie does not have it.
Looking at your laptop.
Even that lie does not have it. So stay informed, stay invested, and join us in 2 weeks' time as we continue to explore the world of finance and investing. Until then, happy investing.
Ciao.